Someone will cue me, won't they? Yeah. Today's labour force update confirms that unemployment is lower than has been forecast widely. Of particular note is that Treasury have been forecasting since prior to the last election that unemployment would peak around this time this year, and they had predicted that it would be at 5.4% now, whereas today's print is 5.2%. Of particular note is that prior to the election, Treasury had forecasted that at this point in time there would be 8,000 more people unemployed than has actually turned out to be the case in these numbers. Now, that is not to say that we are satisfied with this rate of unemployment. We are concerned for every New Zealander who wants a job and can't get one, and that is why we have worked so hard since coming to office to rebuild this economy. That starts with putting the foundations in place of stable inflation, ensuring interest rates can come down and economic growth can be restored. Those are the conditions that lead to a fall in unemployment. And we have long known that until we had those conditions in place, it would be very challenging to get the unemployment number down. We are making good progress as a country. Inflation has come back under control after a period of 3 years where it was not. Interest rates have fallen considerably. In the first quarter of this year in particular, we saw a strong return to growth. Those are the conditions that will allow for job creation. As a government, we're not satisfied to simply do those things. We are using the levers we can to create more jobs for New Zealanders. Between now and Christmas, we will be investing $6 billion in public infrastructure projects, construction work that will get underway with real people and real jobs behind real spades. We've also ensured that the fast-track regime will allow more private sector projects to start between now and the end of the year, and we note that Auckland Port have had their expansion approved. That's real job creation right there. We're setting the longer-term conditions for job creation and business confidence. In particular, we've worked to fast-track free trade agreements. We note growing exports, which is supporting regional job creation. And we've put in place the investment boost policy to encourage businesses to invest in their own growth and future success. So we are making progress, we are doing the right things, but I do want to again to note today that we are not satisfied with this rate of unemployment. We do work hard every day to make sure that this is an economy that can create more jobs and opportunities for New Zealanders. And I'd also, just as a side note that this data shows that average hourly earnings rose 4.5% in the past year, driven by wages in the private sector, which is different from what we had been seeing in previous years, and this is well ahead of inflation at 2.7%, meaning that people are experiencing real income growth.
Are you confident that this is the peak and we won't just see that 5.4 figure in a future quarter?
Well, we are yet to see, and I am very mindful of the fact that in the second quarter of this year we had the announcement of Trump's tariffs and the global volatility that ensued. That led forecasters around the world to downgrade their estimates of economic growth, and therefore we will expect that to be reflected in what has happened in the New Zealand economy, and that of course always has an impact on unemployment. So it is too soon to say what will happen in the next quarter, but I do expect that unemployment will be coming down later this year.
That 5.4 figure was forecast under Labor. Do they have any ground to stand on criticising you now?
Well, Labor have no ground to stand on, because actually what we have inherited is the horrible human aftershock of poor economic management. What happens when you let interest rates and inflation get out of control is that it strangles an economy and it strangles job creation. Treasury laid that out plainly in clear facts before the election. They said that unemployment would be peaking now, and it is of note that there are currently 8,000 fewer people unemployed than Labor was forecasting. So I find it very rich when our opponents criticise the government when we have in fact rebuilt the foundations for this economy.
Did you believe that Labor is that the criticism of Labor is that it was too stimulatory? I guess the response is that this government erred too far in the opposite direction, that it pulled the handbrake on too hard. How do you respond to that?
Well, I just note that right now we are pumping cash into this economy. We have a $10 billion deficit this year, which we are forecasting will increase next year. That's because we believe it is not the right time to stop spending on health, on education, on the police. At the same time, we have set out a 4-year plan to get the books back in balance, because every New Zealander knows you can't borrow forever. Next week I'll be in London and New York talking to the people around the world who buy our debt. We have a history as a country of looking after our financials and managing things well. But if we lose that reputation and just think we can spend forever with no consequence, we will find that the world doesn't want to lend us money on good terms. So we've taken a balanced course where, yes, we are continuing to support the economy through a deficit right now, and you're seeing that show up in hospitals being built and teachers being hired, nurses being hired. But it is important we get the books balanced over the medium term.
Do you believe it's right to characterise these figures as better than expected? I mean, economists are saying the increase in unemployment was a bit smaller than expected, but the increase in the number of people giving up looking for work is even bigger. I mean, capital economics are saying the 0.1 quarter-on-quarter fall in employment in last quarter was in line with analyst forecasts, but notably worse than the 0.2 increase in jobs that the Reserve Bank had been expecting.
I think some New Zealanders, particularly in the commentariat, have got themselves into the habit of what I call glass half-empty economics. Today, on the plain facts of the data, is a lower unemployment rate than was being forecast by Treasury at the budget, that was being forecast by commercial banks, that was being forecast prior to the election. For once, let's not look the horse in the mouth and see this for what it is, which is a lower rate of unemployment than we were expecting, and which translates to more people in jobs than we might have hoped. So I see that as positive news. I do acknowledge that we are seeing more young people enter training and education rather than being employed, and that is reflected in the figures. And look, there are all sorts of ways you can look at the data, but the simple fact is this: we have to get inflation and interest rates under control, growth underway, so that we can have more job creation. And what we're seeing in this data is signs that things are turning.
There is in the data, there's 16,000 people who've lost their jobs in the past year. I mean, what would you say to those people?
I just say to those people that that is an incredibly tough experience, that they shouldn't take it personally, because what they are often the victims of is an economy that was mismanaged, where inflation and interest rates were out of control, and where many businesses have retrenched, and that has led them to shed jobs. I know for those New Zealanders, the message they need to hear is this is going to be better in future. There is hope on the horizon. There will be more job opportunities in this country. We're forecasting 240,000 jobs will be created over the next 4 years. So for those New Zealanders, look ahead. There are better times ahead, and the data keeps confirming the story we've been telling you, which is when we get the fundamentals under control, good things flow for families.
Where are those jobs going to come from?
Well, we're already seeing job creation in the agricultural sector, and it's of note that in the data you're seeing that show up particularly in the South Island and in the regions. I continue to expect export industries, whether it's horticulture, whether it's fisheries, are going to continue to do well. We're seeing that our tech sector is doing really well. Financial tech firms are doing well, and construction is absolutely going to come back off its lows, both informed by government spending on infrastructure and private sector construction projects, which will make more sense now that interest rates are lower.
Because construction is where we're hearing all of these stories about, people losing those jobs. Why has the construction sector been struggling so much?
Well, construction projects, by their nature, require people to do large amounts of borrowing to make the investments in those big projects. And when interest rates soar as high as they did in recent times, what that means is it's very hard for projects to get off the ground because it's simply too expensive to get the debt. So we saw a huge slowdown in the pipeline of planned infrastructure projects when interest rates peaked. Interest rates have now come down, but it takes some time for firms to take those plans off the shelf and turn them into reality. That's why the government is leaning in to do our bit, why we're kickstarting those $6 billion worth of infrastructure projects before Christmas. We think that will help provide certainty and confidence to the construction sector, and we will keep adding to that pipeline. But it's also why it's so important. We have to make sure we don't put upward pressure on interest rates. And those who say that they would be big spenders right now and they would simply borrow more from the world and throw cash at everything, well, the flip side of that would be higher interest rates, which would be a real strangle on the construction sector.
It surely didn't help the cancellation of the state housing bills and other.
I just reject that assertion entirely, and I'd encourage you to check all of your facts. We have built thousands of more state and social homes since coming to office, and those are government-funded projects, and we have pledged additional money to keep doing that in the future.
So you reject that there was a delay or cancellation after you came into government in terms of building projects?
There was not money committed. There was classic Labor talk and no money committed, and what we have ensured is that more state houses have continued to be built under our government, many more state houses, and those building projects continue to occur across the country. We delivered more classrooms last year than Labor did in their last year of office. We've kicked off $1 billion worth of rebuilding of hospitals that were projects that had been long stalled under the last government. We've actually had to rebuild the entire pipeline of roading projects in this country, many of which were cancelled for ideological reasons by a government that was more interested in cycleways and a green agenda. And we've said no, we're going to get those roads of national significance built. And yes, it does take time to get them designed, to get them consented, to get them underway. But we can only regret that the last government didn't do that work before we got here.
And can I just ask you about your trip to the United States? Have you added in extra meetings following the Trump tariff announcement?
Well, look, I am working with the Ministry of Foreign Affairs and Trade to ensure that while I'm in New York, if there are people from the US administration that it would be of value for New Zealand for me to meet with, that I will. And that's more about getting a sense of how the Trump administration are thinking, what their priorities and their focus are, rather than a trade negotiation as such.
Minister, on the facts of this is the worst result for employment since the middle of the pandemic. That was a clear crisis. What is the crisis today?
Well, we have gone through, as every New Zealander knows and has felt, a really difficult period in our economic history, where we had a soaring inflation rate, very high interest rates, and what economists will tell you is that whenever you go through a really difficult period, the last thing to correct is unemployment. So what we're experiencing is the aftershocks of what was a very difficult period, and I do note that this is a high rate of unemployment compared to most recent years. But if you look back over the data series for unemployment, we're still below the long run average. And New Zealanders will remember times in our history where unemployment was a lot higher than this. I do not wish for that at all. I do want to see this number come down. But I think what we need to see is that when this number comes down, that will be New Zealand closing the chapter on what has been a period of very poor economic management and a period that our government is very keen to put behind us. Well, Treasury had forecast that unemployment would peak in this quarter and that in the latter part of the year it will come down. I continue to expect that unemployment will come down later this year. The question that all economists have on their minds is what is the residual impact of the Trump tariff shock in the second quarter. And I just reiterate a message I shared last week, which is, yes, those tariffs are consequential for the exporters that they impact, and yes, we will be doing everything we can to fight for them. But we have to see them in context, which is that over the past year, New Zealand's exports rose considerably, including those to the US. We have a booming export sector, and it's my confident belief that will continue to be the case because we have great free trade agreements around the world. Our exporters are selling products that people want, regardless of the tariffs. And so we shouldn't have too much doom and gloom. We shouldn't go back into our burrows. We should instead be looking out to the world and seeing that New Zealand has great prospects, and we should be confident about the future.
Have you done any specific modelling following Trump's tariffs and what kind of impact that might have on things like unemployment, etc.?
Well, look, I've had regular updates from the Treasury on their predictions about the impact on tariffs. Now, what they point out is once you look at, even if you passed on the full extra 5% in tariffs, as a proportion of overall export good returns, that's only 0.6%. So in terms of the overall economy, this is not a big shock, it's a small one. I want to be sympathetic, though, to those wine producers, to those meat producers for whom this is a really big and consequential piece of news, and we want to continue to work with them so that they can put their best feet forward. But overall, the change in the Trump tariff last week is not something that we think will have a major consequence. It's always been the case that the biggest thing for New Zealand is how the world reacts to tariffs and therefore how that impacts demand for our products and our economy. And obviously the world economy is continuing to be volatile and impacted. However, we have been forecasting that for some time.
Minister, in the figures today, we saw private sector earnings rise at quite a strong 1.4% in the quarter. Public sector hourly earnings drop unusually 0.4% in the quarter. Is that a necessary rebalancing?
Well, we do need to see private sector employers, mum and dad, small businesses, privately owned manufacturers able to pay their people more. And so it is positive to see that private sector wage growth occurring. I think everyone kind of understands it's not sustainable for the government to pay publicly employed people a lot more and give them a lot bigger pay rises than those hired in the private sector, because ultimately we pay all of those wages by taxing private sector workers and taxing private sector businesses. And so we do need to ensure that we're actually creating the conditions for those businesses to do well in. And when the private sector does well, the other thing that happens is I get to collect more tax revenue, which I can then put back into health services and education services. So seeing the private sector doing well is something I welcome.
Thank you.
Great. Straight on to the report.